The most expensive process inside of an entire B2B company is the process of getting an in-market account to become a closed won net new customer. Basically, 100% of the SDR dollars get spent on that process. That a majority of the sales resources, and then you have solutions consultants, you have rev ops, you have sales ops, you have management, all of that stuff focused purely on how do we get an in-market account to become a closed won customer. Over time, I'll develop the estimates, but my guess is that 80% of the sales and marketing costs go into that part of the process. Not to build brand, not to expand customers, not to make customers successful, but just to convert an in-market account into a net new closed won customer. I got a keynote coming up at the SaaS Stock conference in Austin next week, and it was kind of funny because last year they like put me on this like little stage in the corner, and I'm appreciative to speak anywhere, so don't take it the wrong way. But I was just like on this, and maybe like 30 people showed up, so I figured like this year, like, oh, I'll just like kind of do the same thing and wing it, and it'll be fun. But nope, I found out like a couple of days ago that I'm on the main stage at like one of the most important times. So I'm gonna be stepping it up, and some of the concepts that I plan to share that next week, I'll kind of like pilot some of them here because I'm bringing some new material to the table for that event, and the overall overarching story I think is becoming a lot more clear. And I talked about it last week, like the entire reason that I think that we started Paceto and why this concept of like signals and things like that matter right now is because the financial landscape for B2B companies has totally changed. And 2 or 3 years ago, it was growth at all costs. And right now it's profitable, efficient growth, and the way that investors value companies and how a company would IPO and how their market cap is calculated and what their valuation would be, all that stuff is totally different. But how companies go through the process of allocating investments and doing financial planning and evaluating the investments that they make and things like that, all the processes haven't caught up yet. So they still do a lot of that stuff like they did in 2021 that no longer works for the era that we're in. And so I want to talk through a couple of the things that are happening inside of the public markets, right? I've shared some of the stuff. We went through it from David Spitz data, and there's more that he shared with me yesterday that I'm going to be presenting. From Q1 of 2019 until now, the average growth rate of a public SaaS company has consistently declined from about 38% to 18% over the past 20 quarters or whatever the amount is. And at the same time, the cost of customer acquisition cost payback period, otherwise known as the sales and marketing percentage of net new ARR, has doubled. So it used to be like 125%, and now it's over 250% on average, which means that the average public SaaS company, it takes 2.5 or more years to pay back the cost of acquiring a customer. And then the key insight is that most of us don't work for public companies. And in the private markets, that these effects are even more pronounced. At least in the stuff that we're seeing, that growth rate has gone down by more than 50%. So a company that used to be growing at 60% might be growing at 15% right now or 20% right now. So it's even more pronounced on the growth rate. And it's way more pronounced on cost of acquisition, where back in the day, it used to be 24 or 30 months. And right now it could be pushing 48 or 60 months, which is a double. But the magnitude of the 2x increase is much larger for a private company. And why? Because public companies are the cream of the crop. You wouldn't be there if you weren't there. You are in a mature category. You have great leadership. You have people that want your product. You have tons of customers. Like that segment of companies is the best version of public companies of SaaS companies that exist. So when you move to the private companies that aren't as mature and haven't gotten there yet or haven't achieved that yet, they don't have all of those core competitive advantages that a public company would. So they're actually feeling the brunt of this situation more. And so those two data points are really important. Public company data is public. Growth rates have gone down by 50%. Customer acquisition cost payback periods have gone up, doubled over the past 4 to 5 years. And what we believe and what I've been communicating is that if you look at the sales and marketing costs that effectively make up your CAC payback period, or the composition of the payback period, that the most expensive process inside of an entire B2B company is the process of getting an in-market account to become a closed-won net new customer. The most expensive and important business process. Because if you don't acquire a new customer, there's no chance you're going to expand that customer. And when you look at overall B2B budgets, that at least 80% of the marketing dollars get spent on that part of the process, in-market account to closed won, that basically 100% of the SDR dollars get spent on that process, that a majority of the sales resources, and then you have solutions consultants, you have rev ops, you have sales ops, you have management, all of that stuff focused purely on how do we get an in-market account to become a closed won customer. Over time, I'll develop the estimates, but my guess is that 80% of the sales and marketing costs go into that part of the process. Not to build brand, not to expand customers, not to make customers successful, but just to convert an in-market account into a net new closed won customer. And the concept of having a unified pipeline architecture that connects in-market account all the way to closed won, and being able to connect the signals that those accounts are sending us all the way through the process is the fastest way to optimize your entire go-to-market investments and the entire go-to-market strategy, because you have all the data connected together. You have the signals, you have the marketing input, you have account data, you have SDR process optimization opportunities, you have SDR efficiency opportunities, and you have all the data related to the opportunities that sales is working, where right now a B2B company basically only has the opportunity data. And so the unified pipeline architecture connects all of that together and allows us to look at the entire process and optimize that rather than just looking at incremental pieces of the process. And it makes a massive difference. And so having this available, let's look at the marketing specifically. So let's just say that 80% of the marketing investments are spent on this part of the process to convert an in-market account into a closed won customer, which I believe that could be generous. It could be more than 80%. That where does that money get spent? Google ads, content syndication, other forms of performance marketing and lead generation, like affiliates or email newsletters or other third-party conversion-based activities. Even events should be scrutinized this way, because most companies will measure the success of most of their events on pipeline created or leads created. And so all that money is being spent, and those are used to create signals that then we can track all the way downstream in efficiency and clearly see where are all the places that we spend marketing dollars to trigger and create signals that don't drive SDR productivity and sales velocity and revenue at an appropriate cost, and literally just eliminate them or reallocate them to something else that's not in this part of the process. The realization is that we just spend too much money on this part of the process. And we need to think about how we optimize and reallocate our investments across the entire customer lifecycle, not just converting an in-market account to closed won. On the SDR side, there's tons of opportunities if we had this architecture in place, how long does it take us to follow up with someone? What sequences are we using? What messages are we sending? What's the difference between the percentage of meetings that we get versus the meetings that we hold? And being able to look at that and then slice it by account segmentation, geography, signal data, all these different things to be able to look and see that data. And there's huge opportunities to optimize the SDR function that way. It could lead us to say we need less SDR headcount. And it also provides the data layer where if we actually want to use AI to either augment outbound or replace some level of SDRs or certain segments of SDRs, that we have the data layer so that AI knows what to do. And then lastly, on the sales side, when we have all these processes upstream where the marketing dollars are being spent on signals and then the SDRs are booking meetings and they're being incentivized on meetings, and that data is not connected to opportunities, that what happens is that we have way too many salespeople sitting at the bottom of the funnel waiting for real opportunities to close, and we don't have enough of them, which is why we have 30-40% sales quota attainment of the average B2B company today. And it's simply because nobody's looking across the entire go-to-market to understand how much sales headcount should we actually have and how much should we actually be spending on this part of the process. And if we did that, potentially we lower sales headcount, or we lower headcount focused on closing net new business, and we start to reallocate those investments into post-sale and expansion, or into creating demand and getting into market accounts to buy. And so I think that there's a ton of opportunity here. I think that signals is not the only path, but I believe it's the fastest path, and probably the number one priority for companies that are looking to do this right now. And looking forward to getting into some questions and talking about it. So that's effectively the thesis of my talk next week. I'll go into more detail, and then once I do that talk, it's cool because that talk is at 10:30 on a Tuesday. So I'll do the talk live, and then I'll come here at noon, and I'll do the same. I'll do the actual talk again to everybody on the Zoom. So you all get to see. We'll do it with slides, and you'll see all the data points. And you'll be able to give me a lot of helpful feedback there. So with all that, would love to get into questions. It doesn't need to be related to what I talked about here. Happy to go in any direction. Let's do it. Thanks you all for being here.
All right. We've got a question from Mason. So I'm going to bring him on live, and then we have a couple pre-submitted.
What would your advice be for a client who mainly deals with enterprise accounts in their sales cycle? It's, they've tried a number of different strategies, but on the whole, across like 5 years of analysis, it's like an average of 430 days. Like a lot of the spend is across Google Ads. But what would your advice be?
I worked at a B2B company in 2017 that had a sales cycle of 270 days. And the long sales cycle was a function of their go-to-market strategy, not their target customer. That their go-to-market strategy was, let's go out and get cold enterprise leads and try and book a meeting with them when they don't want to buy, which then just just made sales cycles way longer. And it took us 270 days to close a $20,000 a year initial deal. And that when we started to change the go-to-market strategy, and we talked to people that were more interested in buying further along in their buying process, that our sales cycles were 60, 75 days, all the way down to closing deals in 15 days. And that when you adjusted the go-to-market strategy to focus on educating customers and then converting accounts when they're actually in market, that we were able to shorten sales cycles dramatically for that particular set of customers. And so the first thing to realize is that, is this a function of go-to-market strategy, or does it actually take customers this long to buy? Given 430 days, I'd have to venture a guess that this is a function of go-to-market strategy, not that our customers are going to take this long to make a decision. The second thing is, when you have a really small TAM, that there could just be like data issues in this, that a salesperson is just going to have an opportunity open for every one of their accounts because they only have 25 in their territory, and they just keep an opportunity open perpetually, which skews the data instead of really looking at it of when was this opportunity actually created. So those are a couple of things to look at that could be biasing the actual numbers. When it comes to enterprise accounts broadly, some of the challenges that companies run into is, one, you don't have enough volume to really see the patterns. And number two, the process takes so long that it's hard to create the intermediate metrics to know whether you're actually advancing and moving forward or not. And so I think by breaking down the process of closing an enterprise customer might give you some interesting insights. And then honestly, when we think about selling into that level of account, I think that we should be leaning a lot on primary market research that gets paired and supported by our CRM data. But when you have a very finite set of accounts and the volume is very low, I think that we could know everything about every one of those accounts. as a go-to-market professional, as a product marketer, as a CRO. We could invest the time to know everything about all of those accounts, what their key priorities are, what their strategic initiatives are, who the people in the account are, how they want to buy, what tool they already use, if they use a competitor of us, or how they're using the status quo and how they feel about it, who our champion could be. We could understand all of that stuff about them in advance. And so I think that in some cases, I think there's advantages and disadvantages to having a small total addressable market. The advantages are you know exactly who you're going after and you can know everything about them. The disadvantages are there's not that many of them. And then with a larger TAM, typically deal size goes down, not always, but typically deal size and TAM are counter that. In the large ones, we don't know everything about every account. We might not even know every account that could buy from us. We definitely don't know the people that are working in those accounts. We can't invest the money to do all of the research to know all those things. Maybe AI has promised long term, but there's advantages and disadvantages to both a small TAM and a large TAM. So I think for you, it's just about harnessing the advantages of a small TAM and not taking the weaknesses of not having a big TAM, if that makes sense. Happy to answer a follow-up. Yeah.
Definitely, it is related to the TAM. It's very small for sure, and it's tough to say because you're right. The volume is just not. It's not really there as a result, and so it's difficult to see, like you said, the patterns that might be going on, where it might be stuck, and in what stages within pipeline too. But digging in deeper, I really like the note about conducting research like firsthand, just to get some more insights into that. I think that's a good note for sure.
Yeah, like most of my companies have a relatively large TAM, probably larger than yours, but it's not infinite. It's tens of thousands of accounts. But I get insights, like I know companies that aren't my customer and have never been my customer, but that my content gets shared in their Slack channel every week. I like have that insight, right? So I get insight that it's working. I get insight that that customer is more educated than other customers. If I wanted to spin up some type of offer or outbound motion or other ways to close that account, that I would most likely focus more on that one than just some random other account in my TAM. And that's just a qualitative insight that I'm able to collect. And there's tons of examples around that. Some you'll be able to track which people attend our webinars and things like that, but a majority for accounts that are not in market, the data that you want to collect is not going to be tracked by that. Not listening to our podcast, reading our LinkedIn content, sharing it in Slack, talking about it in an executive meeting. What competitive product do they use? What do they think about that competitive product? What are the shortcomings? Do we have a feature that we're able to slide in with? Some of that is more sales than marketing, but account research nonetheless. And when you have a small total addressable market, like marketing and sales start to more converge into the same thing.
Yeah, especially depending on your industry, going and actually visiting customers and non-customers and accounts that are in your TAM can be effective too. All right, we're going to bring on Brian. He's got a question about signals.
We have a ton of marketing technology. I mean, we have like 6sense and a bunch of other things that we're using to pull in signals, and we are writing a lot of those over to the opportunity at the time of creation. So it's like I am able to see some of the signals that are, moving along in the pipeline more. But we do have Gong as well, and I was wondering if you've had any experience with going in and trying to extract all of that Gong data, particularly during early qualification calls, to try to pick up signals in mass. I was trying to go in and check out the back end. Their new AI components are pretty fascinating, where you could just prompt it, but you can only do it on the account level. You can't do it on your pipeline as well. So we were thinking of potentially getting an intern to go in and just prompt every account and then try to find, some kind of trending signals in terms of how did you hear about us, or what are your pain points, or what caused you to request a demo, things like that, and try to pull those out straight from the customer's mouth to see what we can find. But I was just curious if you've had any success trying to do something similar.
Yeah. Yeah. So a clarification, like what the customer says or how they heard about us or things like that, are we don't consider those signals. Um, and so that's one distinction. And then when you have, you have 6sense, it pushes data onto an account record. When that data refreshes, it overwrites that data on the account record. So it could be spinning every time. When you eventually get an opportunity and you push it, it's possible that data's already been overwritten and now you're pushing different data onto the opportunity and what the sales team actually worked. And lastly, there's major survivorship bias where before the opportunity is created, your sales team will take 100 to 1,000 actions and lose. And so all of the 100 to 1,000 where you lose are lost, and you're only looking at the one where you win. And the fastest path to optimizing, if you're trying to lower CAC and improve efficiency and things like that, is to look at all the time that you lose and look at the patterns and cut those things out or reallocate them. And so that's the current issue. Like I talked to some people at Demandbase last week, and I was like, yeah, like we were tracking signals, and they're like, what do you mean? Like we write signals as an activity on the account, like we track it. And I'm like, but you don't create the data in a structure that allows you to analyze it and actually use it. We're just writing it as an activity onto account is not usable. It's impossible to connect it to the opportunity data. There's a lot of issues with just writing that as an activity. And so I think we really need to be conscious of the idea of whether we're just writing data or we're setting ourselves up in a way to look at it and use it, which I think is what the pipeline architecture that would include the signal data is for. And then related to the Gong stuff, you asked like multiple different things. So trying to use AI or, just listen to it, whatever you want to do to be able to look and try to find insights about how to better win the account or how to win the account faster or how to cross-sell them something else that we didn't see as that opportunity. Like those are all great things, but it's really focused on how do we close the opportunity or how do we increase sales velocity of the opportunity, which is a great endeavor and something that I think is valuable. It's just different than the signal concept on its own. And then also looking at trying to find patterns in how did you hear about us, whether that comes from Gong calls or whether it comes from self-reported attribution or asking customers, is also a super valuable insight. But that's focused a lot more on what happened to get that account in market to buy or interested to buy, while signals are focused on what is the most effective way to convert an in-market account into a closed won customer. So all the data is valuable. It's just being used at different parts of the process. So you have how do we get net new accounts in market, self-reported attribution, gone data, survey data, primary market research, win-loss analysis. There's tons of things that you can do there, which is going to tell you how do we spend money at the quote unquote top of the funnel, but not focused on lead generation or trackable activities, which tend to be the most effective. Then you have the signal data, which is when an account is in market, what is the signal that they send? And then how does that signal data allow us to understand trends about sales velocity and productivity and conversion all the way through? And then you have Gong data about what people are saying on calls, which is focused on how do we, more than likely, how do we win, how do we use that data to better win qualified opportunities or convert active pipeline into customers. And so it's just using those data sources at the right stage of the process for the right purpose. But the things that you're doing are more advanced than what we typically see. And I think they're all good ideas.
Yeah, I just figured I'm on the marketing side. I'm in marketing ops. That like with those Gong calls, like extracting that with AI, like our entire content strategy is probably just in there, right? Like, because if we're like looking at all the qualification calls that our SDRs are taking, and we're able to pull out, like I said, like in a trending way, all the pain points that our potential customers and people who are first contacting us are identifying, that just tells us exactly where our content strategy should be focused.
Yeah, I'm pretty sure that you could integrate that with Copy AI and literally do that all automatically. I think it integrates with Gong and other call recorders, and then you have to set up the workflows. But I've heard of that use case before, and using it specifically for a content strategy. Something to consider. I don't know exactly what the pricing or the different plans are, but I don't think it's that expensive, and it could help you if that's something you're serious about.
drop in a tactical tip for the listeners about Gong and how did you hear about us? I dropped it in the chat, but you can use a Gong tracker as your step one to identify and isolate certain. How'd you hear about X brand? How did you come across us? How'd you find X? You can look for all of that in Gong record, all of that in Gong recordings. And then you could take that one step further and use a workflow to then categorize that and isolate all of that data. So I dropped some nuggets in the chat for everybody, but just for listeners. Okay, back to our regular programming. I'm gonna go bring Casper on here.
I have a question regarding the signals, and I wanted to hear like if you would make a breakdown of the most efficient signals that you see, and the other part of the question is the ways that based on the signal, are there any different ways to go outbound? Like, what are the alternative ways rather than just calling or shooting at DM on LinkedIn? Like, especially in a smaller town, are there any creative ways that you see companies go outbound, like doing materials or doing some invites to events or something like that based on the signals?
So consistently the highest efficiency signals, which we look at from signal to closed won, are some form of a hand raiser. So obviously demo request, pricing request, contact sales, something like that is most likely to be the cream of the crop unless your process downstream sucks. Chat is a typically a high performing one depending on what the flow is and what you're trying to accomplish in chat. And then webinar attendees and other things like that are typically higher performing relative to other things that companies have. And then the problem is that we don't see any patterns about what's working for outbound because literally no company tracks it, and you can't even reverse engineer the data to figure it out. And so if we haven't been able to figure it out with any company, we know that they don't have it figured out. And so they're like, maybe 6 Sense works, maybe Trust Radius data works, maybe Bombora data works, but nobody really knows. And I think that's part of the issue that I'm pointing out here, because maybe there's qualitative where, some sales reps like, yeah, I use like job change notifications and it's working well for me, which is a qualitative sentiment, not really that much data, that most companies don't collect the data to even know what's working in outbound. You're able to reverse engineer first party signals that are typically viewed as marketing signals, but they're better viewed as first party signals now, I think. Yeah, there's not much further insight than that because of the gap in tracking, which is part of the problem that I'm evangelizing. Yeah, I wish I could give you more insights, but I'd be making it up, and I don't like to do that.
Yeah, it's all good.
Hey, Mason's going to come back for another question.
Yeah, sorry, different topic. I'm hitting you with all of the questions today, Chris.
Come on back. Yeah, let's do it.
So what's your perspective on the death of SEO? There have been a lot of reports lately. It's, Google, I think, had their lowest like usage quarter in quite some time. And obviously, like, your message has consistently been like, not a lot of B2B, SaaS buyers do their research on the SERPs anymore. That's proven. And it's expensive to pay for it. It's expensive to invest in SEO. And I'm just curious to know what's your take on, what level of investment companies should be putting in there versus other channels that you've seen. I think there's obviously a lot of over-indexing happening with SEO. Same with a lot of, Google payments and stuff like that, but just curious to hear your thoughts.
I think that like global or like large scale number of searches or other type of search data is a poor way to understand whether Google is going to make an impact for your B2B company. So that's like sort of the first caveat. I think when you look at it in like first principles or common sense, that what it leads you to is 15 years ago or 10 years ago, where could a B2B buyer go to find information? And it was basic on the internet. It was basically Google. That was the only place. And now where could they go today? They can go to Google, TikTok, Instagram, a community. YouTube videos, Chat GPT, Demand GPT, another form of AI or another niche LLM. They could text one of their colleagues, which they probably didn't have their number 10 or 15 years ago. There's just so many the people are still making the search. What should I buy for this? Where are my metrics? Like, they're still making the search. They just don't do it in Google anymore. And I think that is the important level of insight, that there's so many more available channels that, yes, people will still use Google, but the reasons why they use Google and when they use Google are, one, diminishing, and two, changing. I think everybody in here knows that compared to 10 years ago to now, like, the main reason that you use Google search is for navigational search. What you're trying to do is you use Google to get from point A to point B. You're not discovering something new. You're going in there and searching Apple or iPhone, and then you're going to the Apple website, and Google is just the toll booth that you pass through to get from point A to point B. Or for some type, there's certain consumer searches or certain local searches or other things like that where Google is a good medium. But when it comes to a lot of information discovery and product discovery and decision evaluation, especially for complex B2B purchases, I think that a lot of B2B buyers have recognized that I'm going to get better information by asking a community, or coming on to a show like this and asking the question, or listening to an expert's podcast, or going to a conference and asking 10 people, or a million other ways that they could get information from their peers, rather than searching in Google, what should I buy for this? And believing the gamed G2 reviews that they get and all the other stuff that have become marketing ploys that are very difficult to trust these days. And so is Google search going away? No, it continues to be a driving force of how people navigate the internet. But when we think about it in the boardroom about our B2B business, there's no fucking way it can be as important as it was 10 years ago. It's probably 10% as important as it was 10 years ago. And I think that we need to be thinking about all the other ways that people are discovering and getting information, and what source of information that they trust. And if you just did the exercise of you could literally survey the decision maker inside of 100 of your accounts and stack them 10 different sources of information: your sales rep, Google, YouTube, a thought leader they trust, a couple of communities that they're probably a part of. And you put those and you say, stack rank these from the thing that you trust the most to the thing that you trust the least. And you'd get the data, and you'd see the things that are at the bottom are going to be your sales rep, your website, Google searches. And the things at the top are going to be thought leaders, a colleague that I trust, probably conferences, or the information that we get that people that speak at conferences, et cetera, et cetera. And you can do that own for your own target customer, and you'd see those effects. And just Google is not going to be a high trust source of information anymore for complex B2B purchase decisions. Even for me, like, I'll give a couple of examples, like for restaurants, like, I now search TikTok for best restaurant in Miami or sushi restaurants in Miami. And instead of getting a shitty blog that's an affiliate link, or like the Google reviews, like, there's a 30-second video from some person that's made a video about the restaurant. I can look at it, I can see it, I can decide if I want to go to it. And I get, 10 results, and I can go through the first 3 and say, okay, that's the restaurant I'm going to go to. And you get a better quality answer. You get a different experience of consuming the information. And I found it leads you to making a better decision around, at least for me, about what restaurant I want to go to. And there's, nuances around clothes and fashion that impacts direct to consumer and B2C type of companies, where before Google, you wanted a pair of shoes, you're going to Google to search that. And now, like, the demographic of probably 35 and below, 30 below at the strictest, 40 below at the most generous, like, most of those people are going to search on Instagram or TikTok or YouTube or different places. Like, I'll search on YouTube to get reviews about what colognes to buy. And so people have certain patterns of where they search that are very different than they were just, 3, 5, or 10 years ago, that I think are really important for for us to recognize as a marketer or a business professional. Happy to answer a follow-up as well, because I talked for quite a bit there.
Thank you. Yeah, no, that's great. It's just the SEO programs inside of a lot of these organizations, they're monoliths right next to, paid on Google Ads. And I'm curious, like, how do you go about showing them the breakdown of, like, obviously things have changed. Everyone knows that the way people are searching is not the same, especially for B2B SaaS. Like, the committee is completely shifted. Everyone's become independent. And I'm just curious to know, like, what sort of breakdown would you recommend doing as, like, program evaluation to pipeline? Like, what are the steps that you would recommend going through to kind of help bring a little bit of that data to the forefront, to help kind of shed opinions within these companies that have such, over-indexing with that?
The problem with what you're trying to accomplish is that because of the attribution bias, that SEO takes credit for a lot of revenue that doesn't actually come from SEO. It just is a bias of attribution of how people pass through to get to your website to convert. On Google Ads, it's very simple. You can make a comparison between pipeline and spend, and I've very rarely seen a company that gets an appropriate amount of pipeline and revenue for the spend on Google Ads, especially in B2B SaaS. Almost every company is entirely underwater. So on Google Ads, it's easy. On SEO, it's not easy to disprove that SEO isn't working because of the attribution bias. So instead of trying to disprove that it isn't working, what you should do is try to prove that your customers are in different places. And so like I mentioned, run a survey to your customers. Where are the places that you trust the most? Where are the places that you trust the least? The first time you ask them, don't give them options. The second time that you ask them, give them options that you think. So you get unaided awareness, and you get aided awareness underneath it. To ask, how did you hear about us on your forum? We implemented this for a company 30 days ago. And they just did the analysis of the first 30 days and have major insights about their marketing strategy and where they should be investing dollars and things like that by taking 15 fucking minutes and putting something on a form and looking at the data 30 days later. And so asking, how'd you hear about us? Is it perfect? No. Are people going to poke holes in it? Sure. But it gives you major directional insights, and it's not a mechanism to say this is exactly what to do next. It's a mechanism to get insights from customers that you don't get right now, to see data that you don't see right now, that allow you to directionally shift the strategy. So those are like two ways, but it's basically most companies try to look at the data that they have and then use that data to decide what to do next. And there is some value in that, but the problem is that they're only looking at 20% of the picture. And like bringing in new data sets of like, okay, well, what do our customers say? What do our customers care about? Who do our customers trust? And bringing that data point in gives you new data to say, okay, like maybe we just need to shift. It's not like the data that you already have should tell you the things that you shouldn't be doing anymore. But then the new data should tell you the new things that you should be adding to the mix. And I've been advocating for having a balanced analytics strategy around, CRM data and other forms of owned, revenue data, but also pairing it with customer data to actually develop a go-to-market strategy. I think you just end up in a much more differentiated and effective strategy.
Awesome. Got a lot of comments going on in the chat from that riff about Google. So,
okay, cool.
Okay, Tatiana, I'm going to ask this on her behalf. She can't come on live, but her question is, should a CMO or marketing function own the gen as far as product and market competitor landscape is concerned? Includes pricing, identifying TAM, etc. Interested in knowing Chris's thoughts on where he sees this start to blur between the CEO and CMO. And PS, this is for larger orgs. They are usually called market analysts, and wondering if such analysts should actually sit in marketing.
I think this is entirely dependent on the business and the skill set of the people on the executive team. I've worked at, especially outside of SaaS, I've worked with companies where the CMO owns the business strategy. They and their team is figuring out How should we price? What should our business model be? We get feedback. We're getting feedback from customers. We're deciding what the product roadmap is, and we're feeding that to engineering. Product marketing and product management are all fall under marketing in these types of companies. And then we have the promotional strategy, and we're driving what the sales strategy is, and then sales is executing against the distribution strategy that's set by the CMO. That's a very idealistic setup, and very akin to how it works in B2C companies. A B2C CMO owns all of those things. A B2B, especially SaaS and tech CMO, typically only owns the promotion strategy, doesn't decide the sales strategy or the overall go-to-market strategy, doesn't make pricing decisions. That happens in finance or sales, doesn't make product decisions. That happens in product or product management. And it's really hard to do incredible marketing when you don't have responsibility over all the levers of marketing, which include all four of those things. Business strategy can be viewed a little bit differently. Business strategy includes things like M&A and exit strategy and long-term vision and other things like that that can be more appropriately set by the CEO. So there's many CMOs that haven't owned all of those things. And if you haven't owned all those things, maybe you don't want to have it be your first time in a big company in an important situation. You can make that your own decision for yourself. And then in SaaS and technology companies, typically the CMO just isn't given those responsibilities. And in other industries and in many B2C instances, they are. So I think that it's just very dependent on the skill set of the CMO and the situation of the business. But I think that if you can do it, it's the CMOs that can do that are equipped to be great CEOs next. That's what I did. That's what I did before I ran companies. Is being able to. And so if you're a marketer and you want to either become a CMO or become a business leader, figuring out how to at least have a perspective, or like sometimes back in the day, I was like a senior manager of marketing. I don't own basically any of the decisions, but I would write a business plan as if I was the CMO just to do it. I would share it with people. I would get feedback. I would look at how mine compared to what people actually delivered. And so going through those exercises on your own to build the skills and to try things can be really productive in setting you up for what you want to do in the future too.
All right. She's got a quick follow-up, so she can come on live now.
Hi,
Cool.
Chris. Thank you so much for answering that. My question also particularly pertained to highly competitive environments where things are moving very quickly. So, for example, implementing a generative AI instance in your company, we had, you could consider a first mover advantage, and then everybody got on the bandwagon, and so many companies started saying, people who worked for AWS and with Azure started saying that we can implement a Gen AI instance. Would a marketing function take ownership of that in an instance where things are moving dramatically quickly and say, look, we've got these people coming up, they're pricing their implementation instance at this price for, this many data sets and so on. It's more in that sort of genre where marketing sits very closely with audiences and can see what.
In an idealistic sense, marketing should do this. Marketing should be close to the customer, and marketing's responsibility is advocating for the customer across all the decisions that a business makes. That's effectively the definition of marketing. However, that's not really how it works in most companies. But what I will say is, I don't think that anyone in a business can get mad at you or reprimand you as the CMO or a marketing manager or anything in between for taking time to understand customers in the market better. And so I think there's a difference between doing the activities and having a perspective on them versus thinking that you own them. And so in your situation, I think that doing them is a good idea. But I'm not sure that you should expect to own them necessarily.
Thanks, Sydney. Hey, Chris. Just going back to what you opened with, I'm a new CRO. I was a former CMO. So I'm very much looking forward to kind of managing, sales, marketing, customer success under one umbrella. It's a dream kind of position. But I am kind of cognizant that I will probably get the same pushback since I investing in brand and demand gen and customer success versus the channels that you mentioned, which is sales, SDRs, and lead gen and paid advertising, et cetera. So I was just wondering if you had any data points or research that you've come across that really backs the point in terms of, we can't just invest 80% of our budget into these short-term playbooks. We need to invest in demand generation. We have to invest in customer retention and growth, or at least look at those data points and signals versus just investing in those kind of short-term viewpoints. I've come across CFOs and CEOs where it feels like they find it easier to understand that if we put X dollars into an SDR, then we get X dollars back. But they find it a lot harder to see that in terms of brand awareness and demand generation. So I was wondering if you had any studies or data points that kind of could help that argument.
Yeah, let me just kind of go stream of consciousness. So we have benchmarks around how companies deploy their money, specifically in marketing, and how that falls into the categories of create demand, capture intent, convert pipeline, expand accounts, where most companies will spend 80% or more on capture intent, or what you could look at as creating a signal. So a majority of the money gets spent there. It's hard to come up with like benchmarks based on existing data about why companies should spend on brand, because most companies don't spend on brand effectively and don't spend very much money on it. And when they do, it's throwaway stuff like, oh, we did that trade show booth for brand because we don't have any data to show it works. So we'll just call it brand. Or we we have that PR agency for $15,000 a month that does press releases for us. I guess that's for brand because we can't measure it. And right now, most companies use brand as an excuse to put things that they can't measure that they just think that they should do. And they just put it in that category and use brand as the justification of why we can't measure it. It's for brand, even though it's most likely not impacting the brand at all tangibly and not delivering ROI. So it's hard to develop benchmarks about why you should invest in brand based on existing companies that don't do it very effectively. I think that a potentially more appropriate way to look at it, or a more accurate way to look at it, is to first look at the process that I spelled out: in market account to closed won. Most marketing dollars get spent there. SDR, solutions consultants, sales reps, operations professionals, technology and tools. Most of the investment gets spent there, and quantify the ROI of that part of the process. This is how much money we spend. This is how much revenue we get back. And you'll realize that we spend way too much money on this part of the process. And then you can look at, we spend this much money on expanding accounts, and this is how much in revenue we get back on expanding them. And you'll probably find, damn, like we're getting a great ROI here. We should consider investing more in post-sale to drive up NRR. And that's a logical conclusion you would get to. And then when you see, oh, we're spending way too much money to basically create signals and close deals, whatever the ROI is most likely bad for most companies, that then you look across the entire process and say, we actually need to reallocate these investments across the entire customer journey, and some money should go to, getting net new accounts in market, what some people would view as creating demand. So I think more of a process of breaking it down to those three categories, and then looking at the return against those things, and also how the budget is allocated across those three things. And you just see most of the budget is invested here. It's also where we get the lowest ROI. We need to think about spreading it out, and here's how we would do it. That's sort of a relatively new thought for me as I've been thinking about this, how to communicate this to people in an easy way. And I think that it's easier to show that what you're doing right now is not economically viable versus trying to convince someone they should spend on brand.
Awesome. We have one last question from Kelsey that'll wrap us up.
Awesome. Grand finale.
Let's go.
So right now, my team is in the process of sort of evaluating, segmenting out a portion of the audience to build a more like personalized marketing program for this smaller group of the audience where the deal sizes tend to be a lot larger And so I just wanted to get your perspective in terms of like sort of critical mass, right? That's needed to personalize from a marketing perspective. Because when I'm looking at this subsegment, like, yes, undeniably, like the deal sizes are a lot larger, but the audience is pretty small, like very small. And also a lot of the pain points that they're experiencing are shared with that larger audience that they're currently a part of. The way that our platform solves for them, there's also a lot of similarities. And so I'm thinking about it in terms of like, where does it make sense to differentiate? Because there's a fixed overhead cost of kind of standing up any like marketing program. And the way I've been thinking about it is sort of like scale tactics versus targeted tactics, maybe like top of funnel things versus bottom funnel things. Um, but the where this direction is coming from, I think, is from really like a sales perspective where they have the benefit of being able to like sit down with these people, right, and ask questions to figure out like exactly how to personalize the sale. But from an outbound marketing perspective, I think it's a little bit more complicated.
When you say personalization, what do you mean?
I I mean, for example, like standing up a completely separate like campaign motion for this audience, like different content, um, different
Like talk me through a real example. Like for your, like, is it a vertical? What would the campaign be like?
so it's not a vertical. It is okay, so they're all project managers, right? Like that's who we're targeting as project managers. There's some that are project managers in a department function, and then there's some that work in like kind of cross enterprise project managers, and they're going to report up into like more senior levels within the company. And there's like there's more seats to be sold when you do it that way. Like the deal sizes are bigger, but at the end of the day, it's all project management, right?
Okay.
And we're doing like reports, webinars, like events, like personalization on the website, right? And so these are the different things. They're not doing a ton of ABM right now, which is where I think this gets like more complicated because I feel like more like account-based tactics would work when you're trying to target an audience like that that's like high value but very small. Um, and so the conversations are, hey, like we want to have completely separate, like build separate reports, build separate like content, build separate webinars, separate events. And I'm like, that's a lot of effort where like there's so many similarities between these people that I don't think that it necessarily makes sense to like segment all of that out versus bring those people together.
So are you advocating for doing this or not? It kind of feels like you're
I
not.
feel like I'm advocating for not doing it, right?
Yeah,
But like,
that's what I heard. Yeah.
and but I guess I'm open to like wanting other people to like poke holes in that, right?
Yeah.
And just sort of question the way that, because in my experience, like when there's that much overlap in like pain points, messaging, etc., I've not seen like the incremental ROI when you do split things out like that, but I am but one person. So I'd be
Yeah.
curious to hear outside perspective.
So I'll start with this. I think that the implementation of quote unquote personalization in marketing inside of B2B companies is largely dog shit. And that the actual way to get to personalization is to really fucking know your customer, not change and write a report about financial services and just change a couple of words so it says financial services now instead of the broad report, or used to be manufacturing, so we change a couple of details. That the real way to get there is to interact one-on-one with your customer, to do things like we're doing right now, to like give them real answers, to understand what questions they ask, to produce content that actually is valuable to them. And I think that most companies use personalization as a like through a technological lens rather than through a customer centric lens. And I think that like I don't personalize anything, but a lot of the things that I say feel personal because I understand the situation inside of a lot of companies. And so it's a very different thing to really understand your customer versus spin up a new campaign for financial services that is basically the same message as you give to everybody else. So that's one thing. And true personalization, I think, will be delivered through that way. And the people that really understand the market typically have strong personal brands, and those people are typically felt like they're doing things that are more personalized, even though they're not. I never have thought about it that way, but a lot of people say it feels like you know my exact situation. You said those metrics, that's exactly the metrics that I have. And I'm like, well, yeah, I talked to 1,000 companies and all of them have those metrics too. And so there's a difference between saying you're doing personalization and having like a visceral understanding of what it's like to be your customer. The second thing that's to your point is that every time you make a segment and you say, okay, instead of running just one marketing campaign to everyone, now we're going to run 2 different marketing campaigns to these 2 different segments, or then we're going to say, actually, we need a different for North America versus EMEA. So now all of a sudden we have 4 permutations, and then we're going to separate it between mid-market and enterprise. And all of a sudden you have like 16. That every time you make one of those divides from 1 to 2, from 2 to 3, that you create exponential complexity across the entire marketing team. You have new campaigns, you have new analytics processes that need to happen, you have new data that needs to be collected, you have different advertising budgets that you need to look at. You have different content that you need to create, and almost no company can do it well, and it just creates unnecessary complexity and a lot of more of the same marketing, just in a lot more complicated way. And so for those 2 reasons, I think if you actually want to do personalization, focus on direct interaction and understanding of your customer that then leads to content that resonates with them. And I think there are very few situations where significant segmentation, specifically on like vertical and content and message, is really necessary. It's just a real conscious choice that we need to make about, is the juice worth the squeeze? And I think that often, like, if we had one campaign that ran to mid-market and enterprise, right? Like, or if we broke it out and we created 2 different campaigns for mid-market and enterprise, and the main reason that people do that is so they can say we spent $100,000 on enterprise and we spent $75,000 on mid-market. It's not about personalization. It's about being able to track the budget and the spend against the account sets. Yeah, I think I'll close my rant there, but I'm leaning toward agreeing with you.
No, I think that that's helpful. And yeah, that's sort of the instinct, as well as like working with like product marketing and go-to-market strategy, in terms of first just really trying to understand what the differences are, right? And like what their needs are, to then decide, okay, is there enough difference between those 2 that, to your point, and like really understanding this audience, are there more commonalities than there are differences?
And I think that if you're able to identify the patterns that affect like companies up and down the spectrum, like those are the gold. Like the things that have really worked in like my career thus far have been things that work, like whether you're a $10 billion company or a $50 million company, you have big problems with attribution. You have big problems with bottom-up reporting. You have big problems with like your CRM architecture and data. You have big problems with the departmental level silos between marketing, sales, and SDRs. And it's just that bigger companies just experience that problem in a different way, but the problem is the same. And so like, it's interesting because when I produce content, that typically the content that I share will equally resonate with a $50 million company and a $1 billion company. And maybe it's just because of what I'm talking about, and it's different for a product company. But from my perspective, it's just because I understand the customer much better.
Yeah. Yeah.
Yeah.
No, that's a good point. Awesome. Thank you. Appreciate you.
Awesome.
For it.
Great way. Yeah. Great way to close out. Thanks for the question. All right, everyone. Appreciate you being here. I will present that that overview next week. Looking forward to your feedback on that. Appreciate you all being here. Hopefully it goes well on the keynote stage or the main stage. So appreciate your support. Thank you, everybody, and we'll see you again next week. Bye, everyone.